Good morning, Paul Georgie from Allendale. It's August 9th and Tuesday morning. We've got to call it turnaround Tuesday today. We've had a big turnaround overnight already from about 5 o'clock this morning in the grains when they were sharply lower to the close of the overnight session, closing higher on the day. So we'd have to call the follow through here at when the market reopens at 9:30. We'd have to call it higher at this point in time, but there's a lot of time between now and then, and these outside markets are still the market that the grains are following. Although we did get some supportive news yesterday afternoon, crop conditions in corn down 2%. Down to 60% in the corn. The soybeans actually increased a percentage to 61%, good to excellent. The USDA also is putting a report out on Thursday morning at 7:30, the monthly supply demand. Trade estimates for that yield on corn, which has been talked about a lot here over the last month. They're putting the trade's expecting a yield of about 155.2 for corn, 42.8 for soybeans. In the ending stocks, according to the Dow Jones survey, we've got 2010-11 marketing year corn increasing the ending stocks there by 53 million bushel up to 923, and dropping the new crop, or the 2011-12 ending stocks, down to 741 in corn. So looks like some very tight stocks there, and certainly trade is finding support in these numbers, as if we see lower yields than that, which we very well could, that ending stocks could even get tighter as we go along. In the soybeans, 223 on old crop beans, that's up 23 million bushel, and lowering the new crop down to 172, down by 3 million bushel. Wheat, a very little change there by trade expectations, 671. That is up a million bushel from last month. The focus here in the near term still is the money flow, funds, liquidation by margin departments at FCMs is certainly a dominating factor. The downgrade of the U.S. debt, the situation in the EU with Italy and Spain continues to be a dominating factor here, causing liquidation in the commodity markets as a risk-off type trade. They need to find out how much money they got left. They may need it somewhere else because the funds are extremely diversified. So that is what's causing the pressure in these markets. Not that we found more corn or soybeans here in the last few days. The FMOC will have a meeting here starting today. They will go until tomorrow and have some kind of a comment tomorrow afternoon, usually around 1:15. Instead, all the money has been moving to safe haven commodity, and that's been gold. Gold market's up right now, $40-some an ounce, while silver down $1.50 an ounce. The Dow showing some signs of improving here, up 120 points on the Dow index as we speak, but don't get too excited. That's after almost a 700-point loss yesterday. So a little dead cat bounce in a market that is certainly under pressure. In the livestock trade, the fundamental news there is good. The choice product is up $1.61. Select is down just 10 cents. Pork cutout was up yesterday, 132, showing that we still got some demand for pork, and still expect that we could see continued export business there. This morning we've seen a reversal in livestock markets as well. They were down sharply early. They're up anywhere from 20 to 50 points as we talk here at this moment. Another factor that we've got to be concerned about is the technical picture. Some of these commodities have broke the 100-day moving average and taken out support on the charts in the agricultural commodities. For instance, soybeans took out the 200-day moving average yesterday, closed below it. Not a very strong signal there. So we need a rebound today, and we need a strong close today if we're going to turn these markets higher. We need more than just a rebound and a bounce during the session. It's something to monitor very closely. We recommend, if you're trying to pick bottoms in this thing, use option strategies, some way that you can manage your risk, because when you've got the 800-pound gorilla moving and it looks like he's just starting to move here, it could be a significant move lower without any good fundamental reason. And even though the weather forecast and the weather conditions across the Midwest last night was expecting to get some good coverage of rain through the entire Midwest Corn Belt. Talked to producers already this morning down in southern Illinois and Indiana. They didn't get any rain. So we've got that as a supportive factor, and yet we've got this this money flow away and risk off type attitude by money managers that will continue to weigh on this thing. So be careful, use wise risk management tools to protect yourself if you're trying to pick bottoms in this market. If you got any questions, give us a call here at Allendale. We'll certainly try to help you come up with a strategy that will work for you. And you can reach us at 800-262-7538. We wish you a very successful trading day, and I'll talk to you tomorrow morning.